Hi Matthew, this is Anne from Chasing Returns. As promised, I've put together this demo for you. I didn't quite stick to 10 minutes, I think it runs to about 15 or 16 minutes. I'm mostly focused on the psychological trading platform, but I also showed you a little bit of PlayMaker, the discipline tool at the end. I skipped most of the detailed features, but I think the overview should give you a quick kind of picture of what we're doing. Anyway, I hope to talk to you again soon. It sounds like you have a crazy 3 weeks ahead, so enjoy your trip to San Francisco and we'll be in touch. Bye. We're looking at Chasing Returns GamePlan product. We're going to start with the dashboard, and we've preloaded an account here, 2,000 trades that made $187,000, and some of our metrics: average P&L per trade, the win rate, which is what percentage of trades are winners, the risk reward, which relates to, on average, the size of winners compared to losers, and the disposition, how long a trader is spending in winning trades versus losing trades. And I will give a whistle-stop tour of the product. So first we see all of the products traded, with the most frequent being on the left. Then we see the profitability. So we take the P&L of the trader and we split it between the top 5%, where he made $560,000, the bottom 5 where he lost 680, and the middle 90 to see if that was a winner or a loser. And finally on the bottom we show our top 3 and our bottom 3 trades. Okay. And what we're looking at is we're looking at a year's worth of data, and we're examining all of the trades. So if I wanted to just analyze my last week of trading, or customize my calendar, I can do that. I can look at my profitability, my best trades for the week, the month, or the year. Okay, so I'm going to very briefly, using the dashboard, explain this trader's metrics, and then we can get into the game plan in detail. Okay, for profit and loss, we have simple chart with the monthly P&L. We have the outliers. So again, we're looking for where is the P&L getting made and lost. We can see losing months here where the outliers are quite large. We have a cumulative curve where we can examine drawdown. And we have this concept of a scatter, every single trade. So if you're a visual type trader, you can scan in and out, and you can analyze what you were trading, when you traded it, etc. These simple metrics help to baseline for each trader how to examine their own KPIs. Okay, so on average, this trader makes $85 per trade, and he had a couple of losing months, right? He wins quite more than 50% of the time. It averages out at about 65. His risk reward is actually quite low. We would like a risk reward to be 1, where a winning trade on average is the same size as a loser. But here we're just going to look at this example. August was a bad month for him. His risk reward ratio was only 0.3, where his winning trades were about 1,000, but his losing trades were 3,000. It's a very big difference for this trader. And here you can see it visually, where the winners are quite small, and we can see quite big losers down here. And then the final one, disposition. Again, we're looking to try and hit that magic 1 number, where you're not cutting your winners too quickly, and you're not letting your losers run. And this trader has been doing quite well on disposition. Okay, so once you understand the simple metrics, we go into the game plan, and we look at these 4 different categories of edge. We have strategy, timing, psychology, and market. Okay, so I'm going to do a whistle-stop tour. I'm going to start with long versus short, right? So long versus short, very simply, of the 2,000 trades, we can see that it's approximately 50% on each side. Okay, so we look at the P&L, and the first kind of sign of interesting edge here is this trader loses money trading short. In fact, he lost $50,000, and here he made $230,000. So short trading is not profitable for this trader, right? And the P&L chart is used to examine, so we can look at the outliers and we can look at the actual number. Okay, when we see that there's some kind of trouble going on, we want to try and understand why this is happening. So we move on to average P&L. Here you'll notice we've had a color change. So this is our analytics kicking in here, where we statistically figure out if there is a positive or a negative bias in that trader's trading. We refer to them as habits. Okay, and here we're printing a reliability of 99%. So the color coding gives you a strength of how much that habit is impacting your trading. So here we see that with 99% reliability, this trader behaves better trading long. His average return is 220 per trade. It was 48% of his trades. Um, the outliers are reasonably split between the two. It's around the 5% on both the best and worst. But that's this number we're printing at the bottom, or the inferred P&L, right? This is saying if I was able to do all of my trades the way I do my long trades, what would my P&L have been? So effectively for this trader, if he could emulate this behavior on the short side, this P&L number of 187 could have been 481. And on the short side, again, we see he loses money. It's statistically reliable. It's not related to his outliers. It is a systemic behavior. And if he traded like that all the time, his P&L would have been 89,000 as a loss. Okay, so that explains that it's significant and this trader should really do something about it. Now, to get to the next level, we look at the win rate. Okay, so the interesting thing here is that even though this trader is losing on the short side, 63% of those trades are winners, right? And actually, it's not a good thing to have a high win rate when you lose, because it's a sign of trouble. The quality of these trades are clearly not good, even though he's getting winners almost as often as he's getting winners on the long side. Okay, so to understand more about that, we go down to the next level, which is the risk-reward ratio. Okay, which was a little bit low anyway for this trader, but here we can see quite a discrepancy. So when the trader is trading long, his average winners are about 1,000 and the average losers are 1,400. So we can see that risk reward is 0.7. But when we move over to the short side, it's only 0.5, which is not a good metric. And we can see that his losers are twice as big as his winners. So the way these trades are getting set up and the risk rewards associated with them is what's causing this trader to lose money. And then finally, we look at disposition, right? You kind of always want to try and stay above 1. And again, for this trader, he's able to stay in long winners almost twice as long, nearly 2 days versus nearly 1 day on the long side. But on the short side, we can see that actually he's letting those losers stay there for 2 days. Okay, so he's letting the losers run on the hope that they're going to come back. So we get to see the behavior that he needs to change, what kind of results he needs to get out of the trades. And then he should see a win rate difference to help him get him back on track. Okay, so that's a whistle-stop tour of how we look at any one edge, right? And just going back to this menu here, I'm just going to very quickly go through a couple of the others. So I'm starting from the top. So product is taking all the products he trades. On this chart, we can, going back to here, this is the one he trades most often, crude oil. So we print them left to right. Okay, here we see that even though he trades crude oil 25% of the time, it's actually only accounting for 5% of his profits, right? And he's got many products that lose him money, specifically the Japanese yen here, right? 5% of his trades, but we can see very large losses, okay? So again, you use the P&L chart to figure out if there's any source of trouble that you want to analyze, okay? Like here with this Japanese yen trade. Then we go to the average P&L. Now, there's a lot of data here, and here's a good example of not statistically reliable, right? If the products aren't traded enough, we'll still show you the average P&L, but there's no need to really pay attention to it because it's not relevant. And we really want to hone in on these deep purple and deep orange ones, which is a strong positive habit here for cocoa, right? So his cocoa trades do very well for him. And in fact, if he was able to trade this way all of the time, we could see that inferred P&L of almost 2 million. Whereas when we look at his yen trades, clearly a lot of his worst outliers, so 17% of his outliers are coming from yen, right? See that there on the tool tip. And that's a very negative trade for him. And again, we can continue down to see if it's the win rate, the risk reward, disposition, etc. Now, in the interest of time, I'm going to skip through really quickly, explain what it is, but not really walk you through them. So trade duration refers to how long you're spending in the trades. This is a very healthy chart where you want the losing trades to be cut at the beginning and you want the longer held trades to be successful. And we see that's actually quite positive for this trader. Okay, my tags, which I made a little bit of reference to on our call, Matthew, my tags is a way for you to tag your own trades and see, so here's various demos that we've done, to see if there's something about your own accountability that's helping you understand where you can be profitable. Okay, now I'm going to scan the others really quickly and get into the psychology. So I'm going to show you the day of the week, right? Again, we're looking at the same numbers, 2,000 trades traded over the course of a week. And here we can see this trader loses money on Thursdays, and he loses a lot of money on Sundays. So 4% of his trades, but it's a big loss. Okay. We're going to go and look and see what's going on. So here this is telling us that this is somewhat reliable, but this is a really reliable indicator that whatever he's doing on Sunday nights is not good for him and it's costing him money. We continue to try and analyze it. So here we see that the win rate has really slipped, the risk reward has really slipped, and the disposition. So there's a systemic problem of bad trades, bad risk reward, low win rates, and bad disposition on a Sunday night. Okay, and it's an interesting one. Clearly, if we don't know the trader, we don't know what causes the problem, but we're able to certainly tell the trader that there's some issue. With this particular trader, I'm going to move on and then I'm going to come back to what the problem is on Sunday nights, because I'm going to show you some of the psychological edges, right? And the one I want to start with is the one called trade sequence. Okay, trade sequence refers to how did I behave on my first trade of the day, second, third, fourth, etc. as the day progresses, right? So again, starting with the P&L, we can see that on the first trade of the day, right, over the course of a year, this trader lost $250,000, right? Very, very significant number, right? So it means that to make this 200K profit, he's got to make back another 450 to compensate for this loss, right? And when we look at the edge, this is really significant, okay? And the reason I jumped forward to this one is it turns out it's the same problem as Sunday night. This particular trader can't wait for the markets to open. So whether they're closed for the weekend or it's early in the morning, right? As soon as the markets are open, the very first trade that this trader executes is a really negative trade for him. It's classic greed type emotion that happens to traders. They can't wait to trade, they lose their standards, and we can see here the win rate, 45, risk reward, really, really low, right? He's getting tiny winners, but he's getting a lot of really big losers first thing in the day, right? So that is, I think, in this particular account, the most significant edge. But we can see that, you know, it's only 11% of his trades, but he would have doubled his money if he was able to get that habit under control. This trader now makes a really small trade first thing in the morning, right? Because as much as he's got a negative habit here, when we look here, the second and third trades, really disciplined trades, really strong results, okay? And the inferred P&L here we can see is 5 times his normal P&L. So this trader should consider trading very small first thing in the morning and then trading larger where he's statistically more likely to do better, okay? Right, now let me scan through a few more. How does he behave in winning streaks, right? So this trader gets better as he wins, right? I'm going to do 2 more very briefly to introduce market edge. When we look at market volatility though, we're looking at 2016, which was a very low volatility year, so there's no trading done above. This is the VIX between 10 and 30. But we can see when the VIX is above 10, this trader underperforms, and when it's low, this trader does really well. Okay, so there is the whistle-stop tour. As I said, you may analyze all of your data set. You can analyze for 6 months, for a month, etc. Right? We have a tiny little overview chart down here, which is once you've analyzed all of this data, where do you start, right? So we have this concept of what are my best edges and what are my worst edges, and how much do they cost me? So again, using that inferred P&L number, we can see here this trader's absolute worst habit is the first trade of the day, okay? And if that is how he traded all of the time, we'd see this inferred P&L of minus 1.4 million, right? I'm going to pause briefly and switch to our second product to give you a quick overview of that. This is our PlayMaker product. Very briefly, for beginning traders, we have a set of guardrails or rules around protecting your trading capital, not over trading, and not getting yourself into emotional trades. And as you can see here, I'm going to get rid of this. Live trades are popping in as you execute them. We're helping you track that you're staying on target, and we're giving you guidance when you're over trading.